folks, welcome to the Pipnotic Symposium on the 5th of June 2024. Okay, so today I'm just going to talk about the modifier of the ASR, just so that you can see, or we'll discuss rather a little bit about the settings, and we'll focus on the modifier and what it does and whatnot. I touched upon this pretty in depth yesterday, but I'm going to reiterate some of the points made yesterday just so that everyone understands exactly what's going on. Okay, so what the modifier does, first we'll start with one chart. I got a few trades on the CAD, on some yen pairs. A lovely buy here, and prices just went up on this beautiful inefficiency. Very, very good. Right, let me bring this up here. We've got it right here. Alright, so we have the modifier on this set to 1.337. Okay, and this value, it changes the lines that you can see here, the green line and the red line. Okay, so first of all, the histogram itself is created as a result of a mathematical calculation. I won't go into the details here because it's not important, but what I will say is that the histogram is calculated based on the perceived strength of a given asset. Okay, so if it's positive, it's going to move higher. If it's negative, it's going to move lower, generally speaking. But what I use it for, I use it to help me identify the beginning and the end of cycles. And these are absolutely everywhere. We have macro cycles, which I've touched on many times before. We have the micro cycles, which we have many of during the completion or the lifetime of a macro cycle. And what we can see is when we see things begin to expand and widen up and reach new all-time highs, then we have an expansion phase relative to the cycle and the time frame of the given asset. Okay, so, and the reason I'm touching on cycles is because it's important relative to the modifier, which I'm going to talk about next. Okay, so when we have a cycle like this one here, prices go up. We also have something called the macro cycle, which is the bigger one, which maybe looks like this. Okay, so this is the macro cycle. This might be the micro cycle or the medium term cycle, and then we have the micro cycle. Okay, so we have this one here. It goes like this, something like that, roughly. It's not perfect. And then we have the tiny ones, which are the micro cycle, which might look like this. Okay, so we have the macro, we have the medium, and we have the micro. That was an ugly one, like that. Sorry, that was completely wrong, wasn't it? This is the micro, and this is the medium term. Okay, and so what we want to do is we want to find out where these overlap. We want to identify them where they're down here or when they're up here. Okay, and so down here to buy and up here to sell. But what we're doing with the asset strength reversion algo is that we are looking at 2 time frames, not 3. And the reason we're looking at 2 and not 3 is because it's quite difficult to identify the time when all 3 are lined up together. It doesn't happen very often. So if we were focusing on all 3 time frames, I think we'd find ourselves getting very few trades. On the other hand, if we focus on 1 time frame or 2 time frames, well, then we are going to see a very high likelihood of more trades. So let's assume that we have the medium term and the short term. They look like this. This is a medium term cycle, let's say the 4-hour chart, and then we have the micro, which goes like this. Okay, it looks like that. Okay, what we want to do, we want to find out when these 2 overlap, or it might also be here, or here, or even here. Okay, and so what we're looking for is we are looking for situations where both the micro and the medium term cycle, they are exceeding either positively or negatively expected values, and these expected values are based on historical values. Okay, and so the histogram and thus the ACR, it's not a static calculation. The numbers going into the calculation of this piece of software, or these two pieces of software, is dynamic, and the dynamic aspect of the numbers going into the algorithm are based on volatility. Okay, so when we have a highly volatile situation like we have here, you can see that things begin to expand. They widen up a little bit, similar to what you see on, for example, Bollinger Bands. Okay, Bollinger Bands, they widen when volatility is high, and they tighten when volatility is low. This is kind of doing a similar kind of thing, but the maths used to calculate the histogram is very different. Okay, so what we need, if we focus on the histogram, what we want to see is we want to see prices move above a perceived premium value and a perceived discount value for the price of whatever it is that we have the chart doing above. Okay, so when the histogram rather goes above the green line, it means we are entering the sell zone. When the histogram goes below the red line, it means that we are entering the buy zone. Okay, so what we want to do, and what the ASR does and the histogram super effectively, it's waiting for this to happen. So we're not doing anything until prices move above or below the buy and sell zones. But what we are doing instead, we are entering territory where we can expect prices to begin to, okay, we are expanding, oops, wrong one, we are expanding, and we're contracting, expanding, contracting, just like we saw here in my little graph at the top here. Okay, so when prices go over the sell and the buy lines like you can see here, this is when the algo gets interested in buying and selling. Okay, so that is a little bit about the histogram and the engine on the ASR. What the modifier does is it looks at the value created, right? It looks at the histogram and it calculates what is it? It's calculating the expected extremes of the histogram, which is essentially what the red and the green line is. Okay, so the modifier affects the green line and the red line. Okay, so the bigger the modifier, let's just do an example. Let's put the modifier on 1, let it run. Before we do that, I'm just going to take a screenshot so that we can compare the two. Here's my screenshot tool. It's going to compare from here to here. And we're going to say go, and then we'll be able to compare the two. Okay, so you can see here, this is 1.0, prices went there. Sorry, 1.0, that is what we can see here. Prices go pretty far above before they turn around. But on the other one, we had previously is 1.337. So price, the histogram, actually entered, the sell side, or the sell, yeah, I suppose the sell zone, sorry, sell zone right here. Okay, but in the old configuration, we actually did it around right here. Okay, the same for this. We entered the buy side, or the buy zone on the 1.3 around here, but with the other setting, we entered it further down, so around here. Okay, so essentially what the modifier is doing, it's forcing the algo to wait until prices reach much more extreme readings, both positively and negatively, before it begins to qualify trades. Okay, and so what we can do if we go, now we're looking at 1.0, if we said, say 1.618, which is a Fibonacci number, and we say okay, you'll notice that maybe the histogram doesn't even reach the buy or the sell. Let's just go like that. Maybe it doesn't even reach the sell zone or the buy zone. You can see here, I mean, we just barely got into it just up here. Okay, prices went up, and we just managed to poke into it just here when prices were kind of like seeking liquidity higher. But if you put this on like an extreme reading, like let's say 2.0, you'll see that the sell zone is so much higher that we never even really get a signal. You can see it's just above, and so we never even get a sell signal here. Likewise, we never get a buy signal down here because prices simply don't get there. Okay, and so the modifier is essentially telling the software and the ASR where to put this line based on the volatility and the historical readings of the histogram and the ASR. Okay, so the higher the number, likely fewer trades we'll see. The lower the number, likely more trades we will see. Does that mean that we are going to get high quality trades if the modifier is bigger? It does, but it also means that we're going to get fewer, and so we're also going to miss good trades because the settings are quite extreme, and they're going to keep the robot out of the trade. So what we want to do is we want to find something that is reasonable. And what's reasonable? Well, I like this number. This is a number actually I see everywhere, 1337 or 337, and so it's just a number that resonates with me. And as I mentioned in yesterday's symposium, you can use whatever number you want, but I recommend that you don't go below 1.0. So I put it on 1337. Reminds me a little bit of my hacker days. I just like that number. I see it all the time. And so I want the histogram to be above the sell zone line, and what the histogram or what the ASR is going to do, it's going to start to look for when we're above it and we start to move below or move lower, which we started to do here, maybe around this one here. I don't know, maybe it's this one here. Okay, so when this white candle closed, it was saying, okay, we went lower, it's time to look for shorts. And so when prices are doing this, like that, then it's trying to identify a selling opportunity up here. And it didn't get one because we are, in my configuration, at least on the ASR, we're looking for multiple time frames to be aligned. We're looking for the 1 hour, and we're looking for the 4 hour as well. Okay, and so we had it while we had it on the 1 hour, we probably did not have it on the 4 hour, which is why we did not get a sell signal just here. But I don't mind. There are plenty of trading opportunities. The robot finds, yes, I mean, yesterday we had 3 trades. 2 trades yesterday. Today we had 3 trades. We're in 3 of them still. And so it's finding enough trades, and I don't want to die of stress, and so I just like to ensure that the trades that we get into are of the highest possible quality. And the joy of combining the time frames is that we are identifying points where we have an overlap in the signals. Okay, so we're seeing when the medium term cycle is complete and the micro time frame is complete. So we are right here. Okay, and so if we were only looking at the micro time frame, it might have gotten in here, or here, or here, or here. And while it's okay to get in here, and here, and here, and here, it's not okay to get in here, because when the medium-term cycle completes, it often does that, or it often begins to contract and move back low, because we're beginning a bear cycle. And so by combining them, we are essentially waiting for these, typically these to buy and these to sell. And we're not focusing on only the smaller time frame cycles, which are, while you're going to get a lot more trades, and 80% of them are going to be really good, you are going to get 20%, maybe 30% of them that are not good, because we're getting in here. We're not paying attention. attention to this time frame, which is super important. Okay. All right, well, I'm going to leave it at that. I hope that is clear. Todd, you asked this question in the room, and I just wanted to address it, and I hope that this answers your question. Maybe gives you a little bit of insight into what the modifier does, how it affects the visual representation of the asset strength histogram, which is this, but also the inner workings of the ASR, which is the algorithm we have running up here. Good. Okay, I'm going to leave it at that. Have any questions, please let me know.